As per the accounting equation, what we own should be equivalent to what we owe. The owning is nothing but assets, and the owing is nothing but capital and liabilities. Capital and liabilities. Okay, capital and liabilities. This capital could be again adjusted due to expenses and income or profits and losses. Such a way we have discussed in the previous illustration accounting equation. Now I am going to introduce the concept debit and credit. Here we will understand the debit is equal to plus like, credit is equal to minus like. That's how you can easily understand this. Right. See, the term debit and credit is nothing but the term drafted by the person who really framed this concept, Luca Pacioli, who is the author of accounts, Luca Pacioli. In his language, debito credito. So as debito and credito is used in his own language, it's nothing but addition and deletion. In simple sense, what we do, plus or minus. Don't get confused with the different term debit and credit. So debit is plus, credit is minus. Okay. If you are able to link this way, you will easily understand. Usually what you won't know predominantly will be debit balance. Plus no, what you are supposed to pay outsider is credit balance. With this small logic, you can now understand the debit credit rules easily. What you own is debit, what you owe is credit. What I have is plus no. What are the plus points you have? Attending the classes regularly. What is the minus points you have? Attending the class late. So both plus or minus the same happens, right? So debit and credit. If you want to increase the debit, what we can do? Do one more debit. There is plus 100 rupees. How can you increase another 100? Add another 100. How can you reduce 50? Subtract 50. So if I want to increase the debit, I have to debit. If I want to reduce that, I have to credit it. Similarly, what I owe will usually credit balance. To increase the credit balance, you can add. To decrease the credit balance, you have to debit. That's all. That's the logic. With this small logic, let me now brief here. I am going to categorize this way: assets, liability and capital, liability and capital, both are more or less same like liability or capital. Expenses also similar to the asset, expenses and expenses and losses. Already explained the difference between expenses and losses. For the payment, if you are enjoying the benefit, then it is called expenses. The benefit enjoyed only for the short period is called expenses. The payment for that, you don't get any benefit, it's a loss. The reverse case, income and gain. Income and gain. Income is nothing but the amount what you receive for that, you are committed to work for some time. I received the fees and for that I had to give the coaching for a month's period. Right, then that money is my income. I get the money without any reciprocal activity from me, then it's my gain. Similar to the loss here. Okay, such a way we can easily understand. This is owning, this is owing. Okay, asset is owning. How the expenses being the owning? How the expenses being the owning? I pay rental charges. Then I have the right to own that property for the rental period. I paid for stationery. I have the right to get the note. So I am owning. Any payment is nothing but owning of something, some facilities. I am paying the electricity bill. Now I am owning what? Electricity services. And income. I am liable. Income means I am liable. I am getting the fees from you. Then I am liable to render the service, right? So the owning and owing is put in a different angle here. Owning and owing is put in different angle. Already you are aware about that. This is the owning. Asset is owning, but I add one extra aspect which is nothing but expenses and losses. And you are aware about that liability and capital are being the owing. With that, I add one extra item which is called income. Liable. If I am getting the money from the third party, then liability. If I am getting the money from the owner, capital. If I am getting the money from third party, for that I am rendering service only for the short period, then income. Getting the money, for that I have to serve you for more than one accounting year, then it's called liability. For the amount I received, I will be serving only for the short period, then it's called income. Said okay, I get the fees from you, I will be working only for 1 month, then it's income. I get the salary, I am working for 1 month, income. I am paying the advertisement amount, for that I am able to get my name published in the newspaper one time, then it's an expenses. The payment gives me benefit for the short period, then expenses. Anyway, I am owning that right. I am owning the right. Whatever the things may be, if it is owning, will be debit balance. If it is being credit balance, owing, then it is called credit balance. Is that okay? To increase the debit, what you have to do? Debit again. Debit again. To increase the credit item, what you have to do? Credit again. Debit is plus number. To increase the plus, you add again 100 rupees already you own. Another 100 rupees you get. So 100 plus 100. 100 rupees what you own is already debit balance. If you are getting another 100 rupees, also debit balance. So debit plus debit, debit only plus plus. To reduce that, what you have to do? You have to subtract. No? Subtraction is named as credit here. Okay. In the case of subtracting the credit, what you have to do? Debit it. That's how, this is the simple rule you have to keep in your mind. Clear? Whatever the things you have already as owning will be debit balance. Whatever the things you are supposed to pay liability, owing, always credit balance. That asset increases will be debited, asset decreases going to be credited. Liability increases will be credited and liability decreases being the debit. Is that okay? So you can simply understand the plus or minus logic. Such a way we will understand the rule of debit and credit here. With this rule, let me explain example here. This particular example was already solved in the previous case using the accounting equation. Now I am going to use the journal entry format to solve this illustration, the same illustration, right? Now, here the same illustration recorded in the format of accounting equation, capital plus liabilities and assets. Such a way we have solved in the previous illustration. Now I am going to use the journal entry format. Okay, already told you the accounting cycle. In the accounting cycle, the first step is what? Any cash business transaction should be recorded properly, which is named as journal entry, right? Date wise. How do I record in a systematic manner? So I am going to explain that now. Okay. For example, Rohit started business with a capital of rupees 5 lakhs. What are the two accounts are affected? Capital and then cash. Capital and cash. Okay. Cash is debit balance. Capital is what balance? Credit balance, isn't it? Capital is credit balance. Cash is debit balance. Cash you own. Capital you are liable to the owner. Your means you are going to account for the business, not for the owner. Okay. Are you working for the owner or are you going to work for business? Okay. If I am having the Bata showroom, will you be cleaning the chappals or not? If you are working in my Bata showroom, you have to clean the chappals or not? Yes. You have to clean the chappal. That's your duty being the showroom owner, means the in charge. And you will not clean my chappals in my home, right? So you have to understand, distinguish between the cleaning of the business thing and cleaning the owner's thing. So we are not going to clean the owner's thing. So we are going to account for the business only, not for the owner. So owner is also one of the liability for us, for the business. For us means business. For the business, liability. Liability is always credit balance. Right. So this is always credit balance. And cash is always debit balance. Okay. Now, how to record that in this book? Okay, in this book. This is called journal book. The format of journal book I will explain here. Journal book. You have so many columns. number 1, number 2, number 3, number 4, number 5, number 6. Number 5. So you have 5 columns here. You have 5 columns. Number 1, number 2, number 3, number 4, number 5. These are the 5 columns you have. The first column is to record the date. As already told you in accounting cycle, cash business transaction, from there you have to record the journal entry. From there you have to record the ledger. From there trial balance, and then from there final accounts. In short, while posting that or while preparing the journal entry, you have to prepare in date wise. So it is very important to note the date also for each and every transaction. So first column is for the date. Second column is all about the particulars. Where you are going to write the debit item and credit items. And the third column is ledger folio. Ledger folio is nothing but, see, from the journal entry we have to prepare ledger. I already told you, no? So we will record all the transaction in date wise. For example, every month if you are paying 10,000 rupees as a rent, each and every month at the time of payment of rent you will be charging to the rent account, right? Month after month. But for the year end I want to know how much rent I have paid. You have to group all the rental payment and sum that value as in total, right? That summing up value is now named as ledger posting. That is called ledger posting. See, I have to now take the items from the journal to ledger. Journal is a separate book. Ledger is a separate book. From the journal book, I am going to group that in the ledger book. To have the cross reference, whatever the account I have recorded in journal, from here it should be transferable to the ledger book later. No, in which page of the ledger book it is posted. To represent the cross reference in which page of the ledger book is posted, I have one column ledger folio. The ledger folio represents the page number of the ledger where it is going to be transferred. So you will not make any error. This is called ledger folio. Ledger folio. Is that clear? So it is the place where it is going to be transferred. Then the another last 2 column is for recording the amount. First column is for recording the debit value. Second column is to record the credit value, especially in terms of rupees. Amount. Now we identified that the cash being the debit balance, capital being the credit balance. Cash being the debit and capital being the credit balance. Is that okay? Once you identify the 2 accounts, one may be debit, another should definitely be credit. Always remember the debit value should be equivalent to the credit value. Already we have seen in accounting equation. Watch that first and then get back to this. The debit account should be first posted here. Here, I assume the date being first, number 1, first date. As date is not given, the first transaction may be assumed to be the date 1. The debit item should be recorded first in particulars column. Cash. Always it ends with A bar C, representing account in short. And this is debit. No. How do I know that this is debit? In the second column, right line, closer to right line or right justification, name this being DR. Debit, representing DR, debit. Capital D. And then the value 500,000 should be in the debit side. This is the process of writing the debit item. So cash account debit. The account term represents what about this 5 lakhs, sir? Means this 5 lakhs is accountable for the cash. Okay, if I am giving you 100 rupees to get some note, on returning you submitted the note and you didn't give me any money. So immediately I am asking about the payment. I paid 100 rupees. What happens to the 100? Then you will say, sir, I spent 90 rupees for the note, sir. Then what about the 10? To and fro charges, sir. Whatever it may be. You will tell, no, whatever the money is there, for what purpose this money is used, I need to know, right? So that accountability, this amount is accountable for what? No, for note 90, for to and fro charges 10. You are representing this money is for that. That's why it is always ended with account. What happens to the 5 lakhs, sir? It is for cash account, sir. This is for him, sir. This is for expenses, sir. This is for income, sir. That representation is the account, right? Then the credit will be recorded later. The credit will be recorded later. The way of writing the credit is, in the next line, leave 1 or 2 character space and then start with the 2. Start with the 2 and name the account here. Capital account. Capital account. Is that okay? Capital account. The value being 5 lakhs in credit. You no need to write CR. You no need to write CR here. By default, when you use the 2, by default it is understood. You no need to write the CR. After passing this is the format of posting the journal entry. Now I have passed the journal entry. I have passed the journal entry. Now can you brief what about this transaction? This transaction is nothing but introduction of the capital of rupees 5 lakhs by the owner. Will I be able to give a note of that? Yeah, of course you can give a note of that. So the note of that is usually starting with the being okay. Business started being capital introduced. Clear? Rupees 5 lakhs. Being capital introduced, rupees 5 lakhs. This is nothing but narrating about the transaction. What about the journal entry, sir? This is nothing but a narration, nothing about the capital introduction. Such a way we have given the narration here, being capital introduced. Right. Second, now the transaction will be this one. Okay. Open the bank account in State Bank of India where cash is also affected. Okay. Both are asset. Both are asset mean debit balance. Both are asset mean debit balance. But what happens now? Bank account is open, so bank account balance will be increasing. Cash account balance should be subtracted. To subtract that, what we have to do? You have to use the other term, credit. By default, cash is also debit balance, bank is also debit balance. Now, what happens ultimately because of this transaction? Bank account balance increases, cash account balance is decreasing. So, to decrease the debit balance, you have to credit. Now, how do I pass the entry here? Let's see here, number 1. This is, I will name this being 0. Okay, number 1. Bank account is debit. No, first bank account should be recorded. Debit item should be first recorded. I end with A bar C representing account, and it is debit. No, in the right side means closer to the margin, you can name this being DR and leave a space and write this as a 2. The credit item is now named here to cash account. The value being 4,80,000 rupees. 4,80,000. Is that okay? Being bank account open. Being bank account open. Right. Bank account open. Okay. Opened. Okay. The next one is bought furniture rupees 60,000 and check was issued. So furniture is also asset, no? Debit balance. Check representing the bank, also asset, then debit balance. Because of the furniture purchase, furniture increases, bank balance decreases. To decrease the debit balance, what we have to do? Credit it. So that way also you can work out here. So second one, I am going to debit furniture account. So furniture account debit, value being 60,000. 2. The credit item should be now posted here, bank account. The value being 60,000. Narration, I leave it to be solved by yourself. Right. Third one, bought plant and machinery for the business for rupees 1,25,000. So plant and machinery is an asset. Asset means debit balance. An advance of rupees 10,000 in cash is paid. Cash is also debit balance. To Mrs. Ramji. To Ramji, we have paid only a part of amount. Balance not paid. So then the party is my creditor. I am liable So Ramji is a liability, so it should be credit, right? So you have to find out that. So plant and machinery is an asset, debit balance. 10,000 rupees is the cash, debit balance. And as I have paid only a part of the full amount, the party to whom I am supposed to pay later, I am liable, then it's a credit balance. Now what happens to these balances? Increases or decreases? Plant and machinery, debit balance, because of the purchase it increases, so add back. Cash, because of this payment, the cash balance will be decreasing, minus this one. And Ramji lol, new liability increases, so it should be added back. To add the debit extra, you have to debit it. Okay, to add the debit balance extra, I have to debit it. So plant and machinery should be debited here. Third one, plant and machinery account, P&M account. I write that in short. Plant and machinery account debit. This is an asset, debit balance. Because of the purchase, the asset is increasing. To increase the debit, I have to debit. With that logic, I am going to debit here. The value being 1,25,000. Because of that, I immediately made a payment of 10,000. 10,000 is an asset, being the debit balance. To reduce that, it should be credited. So leave a line, leave a character, and then write this as to cash. To cash account, the value being 10,000. Balance supposed to be payable, liability being the credit. As I supposed to pay later, the balance increases, so credit it. So to Ramji lal. To Ramji lal, right? Okay. Ramji lal account. This value being 1,15,000. 1,15,000. Let's move on to the fourth one. Goods purchased from Messrs. Sumit Traders for 55,000 rupees. Goods is a asset, so debit. And Sumit, to whom we have to pay because of this purchases, then I am liable to him. Then it's a credit balance. It's a credit balance. Is that clear? Asset debit balance increases, so you have to debit. Mrs. Sumit Traders credit balance, it should also be increases. It should also be increased, so it should also be plus sign only. Fourth one now. Goods already debit, it increases, so you have to debit it. So goods account debited. Either I can name this being goods, or I can name this being purchases. When I am purchasing the goods for the sale purpose, the purchases should always be, the goods should always be debited to the purchases account. Goods is purchased for sale as your business motto by adding some margin, then such purchases should always be named as purchases only. Should always be named as purchases only. So I am going to write the purchases here. Purchases account debit to, as I have not paid, I am liable to pay to Sumit Traders. As I am liable, that is a credit balance. That credit balance increases. So to Sumit Traders, I have to credit him. Sumit Traders. Okay. This balance being 55,000. Okay, 55,000. Then we will move on to the fifth one. Goods costing 25,000 sold to Ranjani Enterprises. Ranjani Enterprises. Goods sold means we have to always consider the account name being sales account. Goods is an asset. Goods is an asset. Ranjani Enterprises is a asset. Okay. I have sold, but I have not received the money. Sold but money not received means that party is liable to me. He is liable means I am owning, no, it's my asset. So in my angle, Ranjani Enterprises is an asset. Asset means always debit balance. And goods is always asset, debit balance. Is that okay? Goods is always an asset, debit balance. Clear? Any doubts here? Now, when you purchase the goods for the sale, we usually call the goods being the purchases. When we are selling the goods for a profit motive, then it is named as sales only. Sales only. Rest of the things are the normal one. Because of this sale, the asset value decreases. By default, asset is debit. No. To decrease, what we have to do? Should be credited. It should be credited. And Ranjani Enterprises an asset, that balance is increases. So it should be debited. Debit increases, add it. Here debit decreases, so credit it. So I am going to debit whom? Ranjani Enterprises account is going to be debited. So fifth one, Ranjani Enterprises. Ranjani, to whom we have sold the goods without getting any money from him. As we have not received any money from him, he is liable. I am owning. So debit balance. Whether the balance increases or decreases. Yeah, I am selling. No, the balance increases. So debit balance increases means you have to debit. So Ranjani Enterprises should be debited. Ranjani Enterprises, right? The value being debit. So enterprises, sorry, enterprises. This value being 35,000 to sales account. Sales. Goods is an asset. Because of the sales, the goods is decreasing. Asset means debit balance. To reduce the debit balance, we have to credit it. So I am crediting the sales account. Sales, indirectly, you have to keep the goods in your mind. Goods is always asset. Whether it is increasing or decreasing, that way you can think over. This value being 35,000. Is that okay? So I am solving this illustration under journal entry format, not final equation model. Is that okay? Come on, finish off copying this.